Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Don Roose of U.S. Commodities and a higher close and everything but the hog market today. And Don, I want to talk about soybeans first off. That market's been strong the last couple of days there. Let's talk about what's driving that. Are we trying to put in some sort of a seasonal low here?
Well, I think when you look at the soybeans, no doubt, the soybeans reacting positive to negative news. It reacted positive to the Trump news that we're going to have a meeting with Xi here, the October 31st in South Korea. So that was positive. The seasonalities, usually, Michelle, we bottom this market in years like this around that first week of October. Certainly feels like that's occurring right now. Also, we have bull spreads working, front months gaining on the back, big carries in the market. So that's a positive sign. And, we just continue to watch the South America weather, which so far is not threatening, but it, you never know, it can change on a notice. And then, of course, no producer really is selling soybeans that go to the Pacific Northwest, very aggressive. So those soybeans basically off the market for right now.
For sure. But don't you think we have a lot more soybeans that are being stored here this fall, especially now that we're talking about possible trade aid and a possible China deal at the end of the month?
Well, I think so. Although, actually in the gut slot of the Midwest, we're running into sales a little more aggressive versus the corn, just because the price isn't really that far off of what we've had top for the year. So we're seeing that. And we're seeing some re-ownership coming in. But, no doubt, soybeans are going to be tucked away. There's a carry in the market. And let's just see. Sometimes that makes sense because the demand does pick up. Things change with China. South America weather can change. So, it may be a good bet here for right now with the carries in the market.
Let me ask you technical specifically on soybeans. It looks like we're in about a 30-cent trading range here. What gets us above the top side of that trading range?
Yeah, you're exactly right. Our trading range basically is 10 to 10.20 on the downside, and basically on the upside 10.40, 10.60. What pushes us up to the upside is the fact that, I think the dominant thing would be if we get an agreement with China. You never know, those things can unthaw pretty fast. And remember, if South America gets into a weather problem, a lot of these soybeans, you think they're just bought from Brazil, but a lot of them are bought option origin by the Chinese. So that means if they get into a weather problem, China with Brazil's crop, they can quickly switch them to the U.S. So some things like this, it's always the unknown, that takes you by surprise. So I think it's something like that, Michelle, is probably the two big things to focus on.
Yeah. Don, it looks like corn wants to try to follow the soybean market, but that's pretty difficult when you're in the middle of harvest, right?
Yeah, we think we're somewhere in the area of maybe 35% done on corn. Harvest is going to go pretty quick if the weather stays the way it is. So, look, the same thing. Look, when corn's 50% harvested, the end user starts to get more aggressive trying to cover stuff. And again, the producer just doesn't want to sell down at this level. And, there is an open chart gap on the downside at 405 on the continuation charts, but there's also a gap at 432 3/4. If we get over 433, Michelle, I think it's kind of an obvious head and shoulders pattern that we have. It targets you up to that 446 area on December. So, what gets us out of this range, I think, is a lack of producer selling. End user steps up because, for livestock feeders, you certainly have, when you're below the cost of production and ethanol people, it's the time to get a little more aggressive. So I think it's lack of selling, end user covering, and then we'll see what this yield does.
So let me also ask you, are farmers just not selling the crop, or is the crop not out there? Are the yields that much lower or not?
Well, I think when you look at the corn market, let's talk about the yields there. There is no doubt in the gut slot of Iowa, the yield is not there. It's substantially down. Of course, there's some good corn too, but I'm talking like 20 to 30 bushels under what the anticipation a year ago. So in some other areas also, we think, so the bottom line, we think the crop is not there. We think in short crop years, you put your high more into the end of harvest you go up into harvest, not down like you do normally seasonally. Thing you have to be careful of with short crop years is you put your high in and then you drift down into the spring. But we'll see if that happens. But for right now, I don't think producers are interested at this price level with a lot of uncertainty ahead, selling cash corn for most people below the cost of production. Just not happening. So go to work and store it right now is what we're seeing. If you are selling it, people are taking advantage of the carries. So that grain's not coming on the market right now anyway, Michelle.
With the government shut, we're not going to have the October WASD tomorrow. Is there a possibility we won't get the November one either, depending on when they get back to work?
Yeah, I think that's exactly right. I think the feeling is it takes a couple of weeks to kind of compile this stuff. So, if it gets close to the 1st of November, that one probably goes out the window here also. And then remember, historically, we don't get a December report anyway, so you're left with the January. So, we'll see how it drags out. But if we don't do a November, do we come up with a December anyway? So we'll see. It's very uncertain, work in progress. We hope for all the reasons that we get some agreements here on the budget sooner rather than later.
Yeah. Do you think the void of information has hurt the market or not?
I think you can say it has, but I don't think I think what it does, it gets back more to the real fundamentals. I mean, the government hasn't exactly been on target with some of these crop yields out here anyway the last couple of years. So I think what we're going to do is pay more attention to what the real yield is on corn and soybeans. And then we look at the demand side ourselves. And I think the market will tell us, it's telling us right now some things. It's telling us the crop's not as big on corn, or the spreads wouldn't be narrowing, or we would be going down into harvest, not up. So I think to answer your question squarely, I think we'll rely more on our trading instincts than anything else. We still get exports. So, that's one factor that we do get.
Let's talk about wheat. A little higher today. We had a key reversal on October 1st, but do you think that bottom is actually going to stick? Because we've had those reversals several times now.
Yeah, we have. Exactly. I mean, those key reversals, we've had numerous ones. They haven't stuck. The only thing that's different is we're further into another crop year. Now we're looking at South America. There are no problems there yet. We've got a lot of big crops dialed in. We've got Ukraine big crop dialed in. We got Russia. We've got the Europe. We've got South America, Argentina, and Australia. So, I think the funds are short about 95,000 contracts. So it feels like we need some kind of a catalyst to go up. We're probably at fair market value down here. And remember, when you're building this long of a base, once we break out, you can have a better run than you think, and be more odd to have the base break out and have this big drop to the downside. So I think we're just waiting for a catalyst. Again, you hate to bring up it's all about weather, but it's probably going to be more about weather. World exporter stocks are large. That's one issue that we're fighting, and that's why you can't go up when you have little problems. It's going to take a big one, Michelle.
Yeah, and then the higher dollar has not helped, has it?
Yeah, exactly. The dollar, it has been sinking here since the beginning of the year, but it's kind of stabilized, starting to move up here a little bit. So that's an issue. You do have some inflationary factors out here that, maybe are trying to help support a little bit. Funds are certainly in some of these different commodities, the metals and such. So it wouldn't take a lot for them to look over at the grain market when it's below the cost of production and at value, Michelle.
Cattle market higher today. We had feeders into all-time highs. And are the feeders just being pushed here by the strong cash in the country?
Yeah, the feedlots are really aggressively trying to source the feeders. And remember, we don't have 50,000 head a month coming in from Mexico. So that border remains closed. So that's a real void. And I think that's really the discrepancy. That's what's keeping the feeder cattle firm. And, we're in the feeder cattle run right now. And so the feedlots continue to try and buy the feeder cattle, particularly with the grain market at some value.
Do you think that feeders can keep going here? And can the live cattle futures, those nearby contracts anyways, can they go back up and take out those contract highs or all-time highs there?
We've got some of these cattle are now getting it close to on the board into the mid 40s. So, and actually the front months of cattle, December cattle versus normal basis is probably about, I'd say $4 to $6 too high versus the cash unless cash comes up. But it's going to be all about what happens with the packer and what happens with the demand. Box beef is going to have to move up or cash cattle down for the packer to make a little headway. He's been losing about $150, $200 plus here lately. So it might be one of these that you have to be very careful. We're certainly, if anything happens, there's more downside than upside. But this is historical bull market, and it's over when it's over. It's been led by the cash market, but now the futures are the one that's leading it. So it's a big change in the overall what's been happening.
And hog futures down a bit today. We've had a pretty good correction off of the contract highs here. Do you think we continue to correct on or not?
Well, I think basically we put in the top on the hog market when we had actually a very bullish hog and pig report.
Right.
The last one we had, it was the farrowings that we had during the summer were at a 30-year low, the breeding herd at 11-year low. We put the hogs into contract highs on that day. We go up like 250, 260, but it couldn't really stick it. And since then, we've been pushing to the downside. And I think that's just because the trade feels that we've got the disease problems behind us. We're starting to rebuild the herd. We saw that in the DSFEB farrowing intentions. And, we've kind of just stalled out. We've got into a normal seasonal slump. But certainly the December hogs run a too big a discount versus the index right now. And that's a supportive factor. So I think it's one of these that we keep drifting, but then we'll see what happens with the demand and what happens with the beef.
All right. Thanks so much. Don Roose, U.S. Commodities. That's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.